Hello everyone, and a very warm welcome to this ICAS webinar in association with Sage. For those of you who don't know me, my name is Jeremy Clark. I'm the Assistant Director of Practice at ICAS, and I have the pleasure of being your host this morning. This is the third of our series of 5 webinars on preparing for MTD in association with Sage. And today we're looking at a subject that accountants have always found difficult at the best of times, and our uncertainty or embarrassment has never been felt more than with the imposition of additional work for our clients, which is not of our own making. I am, of course, talking about how we charge for this. We'll look at different approaches to pricing and how they might fit in with your firm's values, how to communicate and justify the changes and additional charges to clients, and how to position your firm as proactive and adding value. I'm delighted to be joined by Sage's MTD expert, Chris Downing. Chris really doesn't need much of an introduction to many of you, but for those who don't know him, he's Director of Product Management for Accountants and Bookkeepers at Sage and was previously a partner in an independent firm with nearly 20 years of experience as an accountant in practice. A respected voice in the profession, Chris is passionate about technology adoption to drive efficiency and growth for accountants and SMEs. A familiar speaker at many of the UK's leading accountancy events, Chris has spent the last several years helping the accounting profession embrace technology, navigate change, and make digital feel doable. He's done a huge amount in bringing together the diverse world of accountants, software providers, and government, and is hugely respected in all 3 sectors. In short, as the saying goes, he knows his onions. Before we begin, just a few housekeeping matters to remind you of. You can submit questions at any time through the Q&A facility, which can be accessed at the top of your screen. Questions can be submitted anonymously, and Chris will answer them on the way through. Please also join the conversation today through the chat box accessed at the top of your screen. This allows you to comment or discuss with fellow attendees on matters covered by the webinar. And we are, of course, recording it, and we'll make it available for on-demand viewing afterwards in case you want to refer back to it or share it with others. We'll look forward to receiving your questions throughout the course of the webinar, and of course Chris will answer as many of those as possible on the way through. Now, I know there's a huge amount to get through, so I'll just pass you straight across to Chris to get on with the detail.
Morning everyone, and thank you for joining us in this another session all about MTD. And I'm just going to sort of share my screen, so allow that technology to flow through. Flip the switch there, and there we go. Technology is amazing, isn't it? Now we're going to be talking about pricing for making tax digital, and this is a continuous hot topic, and I've been talking about pricing for MTD for well over 12 months, but now the reality is kicking in. MTD is happening in 30 working days. That's a scary thought, but also pricing is top of mind. I've literally been sharing WhatsApp voice notes with a couple of accountants before 8 o'clock this morning about what to charge, how to charge, and how a client's going to be feeling about going from paying a bill once a year to paying something on a monthly basis. And I think this is the biggest challenge MTD brings, is the fact that this is a theme of work which we've never done before. We're not quite sure how much of our time is going to be spent on it, because the reality check is, okay, fine, we don't charge by the hour, but we measure our profitability by the time or the effort spent, and we gain value back from it. And also, we're not quite sure how our clients are going to be behaving around MTD, sharing information timely. And when you think about our mindset right now is self-assessment was 3 weeks ago. We were just feeling the challenges of, let's say, clients not behaving properly, and also think about these same clients. Did we actually make any money from them, from the effort we spent? So really the point of MTD, especially with pricing, is actually ensuring that we get paid for the value that we deliver. So as I said, this is a live session. Drop the questions in and I'll weave them through if you do have any about the subject. Now, there are some slides which I've discussed before, but I think it's a useful reality check, especially for those who may not have joined maybe the previous two sessions. But really, the headline themes is the fact that MTD, as accountants, we know about it. We've been reading about it, watched various webinars, gone to events. We know it's happening, but actually, our clients do not know it's happening. And the reality is, when we, Sage, have interviewed over 1,000 sole traders, unsurprisingly, only a third really know it is happening, and will have to have a real true awareness of what it means. And really, when it does have an awareness of what it means in terms of digital record keeping, the benefits of digital record keeping, I think that's an interesting concept to talk about, because we, as the accountants, are the one probably going to have to do the work, the conversations, get clients on board. But actually, when small business owners start to use the right technology for their business, i.e., not has to be big bang bells and whistles, but the technology that helps them support their businesses, get paid, have visibility of performance, feel a bit more organized, they do see the benefits. And also, more importantly, when they have an understanding that this is happening, whether it's they're coming in from April 26 or maybe in 2 years' time, I'm always surprised by the events that I deliver to sole traders. They say, I want to get started now. I see it's happening. I just want to get involved with it. But for those definitely who, let's say, have a lack of awareness and just see the high level numbers or maybe the high level needs, their concerns are, is this more administration? Because when they think about the tax return process, all they imagine and feel is maybe the chasing letters or the letter beginning in April and May each year saying, could you send me some tax information, please? And then your follow-up chasing letter in August or September, and then those chasing phone calls in the autumn, and then they suddenly get around to sharing information. All they feel is admin and anxiety, and also the tax bill. So it's all about creating a greater awareness in terms of what MTD will mean to them. But also with that, let's just a sense check in terms of what we'll be seeing over the next 3 years. So clearly, from April 2026, sole traders and landlords with gross income of more than £50,000 will have to maintain their records digitally, file a quarterly update, and submit their tax return via software. And that's going to be about 850,000 coming into play. Now, obviously, these businesses, they could be a little bit more sophisticated. Some will be VAT registered. Some may already be using software. But then when you think about April 2027, this is when the cohort really expands, because it's going to be 1.1 million sole traders and landlords with over £30,000 of gross income. These individuals are possibly not paying very much in any professional fees, but also the reality is about 30% of that population, 1.1 million, do not work with an accountant or bookkeeper. They file their own tax returns. So just imagine how they are going to feel and react. Well, one, they have an awareness that MTD is happening, but also it's a case of when they realise the fact that they can no longer file their tax return via the HMRC portal, where they're pumping their numbers in and may have a familiarity in terms of how that process works. And now they have to use software. And from my approach to you, on the basis of the software which has been built for the tax return for under MTD, it is quite intuitive. And this is the whole point, is software has a different design metrics, and therefore it does make the process easier. I can imagine an awful lot of sole traders will say, I don't want to do this anymore. I'm going to reach out to an accountant for the very first time. And why haven't they not reached an accountant before is they may think, where's the value for money? And as we all appreciate, an accountant is always value for money, because it's all about hitting those targets, making those deadlines, and ensuring they're paying the right amount of tax, but also giving guidance in terms of how the business performance. But they don't know that. They don't see the value until they've actually engaged one. And then obviously the threshold drops down to £20,000. But really, MTD is going to be the continuous theme going forward for digitalisation. So when we think about that initial deadline, it's all about hitting that deadline being the 7th of August 2026, when that'll be the first quarterly deadline for MTD. But also in the background, as accounting firms, you are facing an awful lot of change. You're going to have conversations around pricing continuously for every client type, I can imagine. Because whether it's through sole traders and landlords, whether it's, let's say, the phases for 26, 27, 28, just thinking of your payroll clients, you're going to have to review, reprice, and re-engage all your payroll clients over the next 12 months, especially those where they have benefits in kind. Because the P11D is disappearing from April 2027, which means that payroll benefits kind will have to be reported in software, more client chasing, different software being used, more reporting, changes. That's inevitably going to take more time. So you need to be in this mindset of the fact that because of these legislation changes, and very fortunately, companies' house reform has been delayed, and I think that was going to be the headache. There is going to be so many conversations about pricing for every client type. So we need to have, let's say, part of our mindset in terms of making sure we maybe change the way we price services, maybe an element of transparency, but also be in a situation, the fact that we do price our worth. But with that in mind, it's also thinking about what's going to be involved in terms of the conversations, the types of clients. So whether you're the sole trader is a bit more complex, so you've got P&L and balance sheet, how much, let's say, extra work may be required in terms of reconciling control accounts or capturing fixed assets properly, to those more simple sole traders, cash in, cash out. And again, more importantly, how do we use the right technology, which literally automates much of the process? And I think this is one of the key things with MTD. We're going from a process which has been a once a year job where we've just used the familiar tools available, and that tends to be Excel, to having to use software which is still Excel with bridging, but maybe using software, but then seeing how we use the software to actually save us time. And I think that's the benefits. But the trouble with MTD, we're being forced into this change, and also a change where clients will be saying, what do I have? What's this charge going to be? How much the software's going to be? Oh, are you going to be doing my accounts 4 times a year? And we need to mitigate that, plus the landlords. Now, the letters are starting to drop. So we had that first, let's say, letter drop last year when HMRC would basically start making a guesstimate of who's coming in. But now they know, based upon the 31st of January deadline, the letters were printed at the beginning of last week, and they are now actually landing on doormats. So therefore, we will be seeing more conversations from unrepresented individuals saying, what is this MTD like? I'm reaching out to the account for the very first time. So when you think about the process of pricing, the process of pricing is not just about, let's say, creating an awareness of what we should be charging, but giving, let's say, an awareness and confidence in terms of the value of the services being offering. Because we are going from a situation where it's not an annual piece of work, it's going to be a regular rhythm of, let's say, client chasing, data capture, data processing, and that submission of a quarterly update. Now, when we think about the details of what's around the MTD process, I think understanding the details is really important because it gives you, let's say, an understanding in terms of those touch points, how you can, let's say, change habits of your clients in terms of sharing information, but also thinking about, let's say, what is the difference between a light touch on digital record keeping to, let's say, a full-blown set of, let's say, management accounts, which could some people think about, but it's not. So the situation is clear. Where you have an individual with multiple trade income, so whether it's Pete the plumbing repairing leaks Monday to Friday, he may be selling on the Amazon at the weekend or at nights. They are 2 separate trades, and therefore they will need a separate quarterly update themselves. If Pete has some property in his own name or multiple property in his own name, that's a set of records, that's a quarterly update as well. But again, if Pete shares property, a joint property ownership with his spouse, his best mate, or a group of friends, again, that share of income as well as expenses need to be amalgamated into a single report and then submit on a quarterly basis. Now, there's some great software out there that deals with it. So Hammock, if you've never heard of it, it just does that joint property ownership really nicely. But then again, it's the whole point is there will be complication, additional chasing, reporting. So having that visibility and understanding of what your client's needs are and the complexities around it, it's more than just being a landlord, it's actually how do they do rental income? Do they, for example, have, let's say, a managing agent in place? So there may be a statement coming in once a month, once a quarter, but how does that tie up to the rental income received? And that will be net of costs. So you'll have this situation where you'll have to be grossing up income on a quarterly basis to make sure you're showing the true value rental income. So again, all of these complications give an understanding in terms of those things which were dealt with once a year in one process and one activity to something which has to be performed more regularly. Then also it's a case of the actual tax return process. The tax return process is only changing on the basis you need brand new software. So the whole point is you'll be deciding what type of bookkeeping tools which you'll be using for the regular rhythm of quarterly updates. And therefore you could have, let's say, Sage for the self-employment, Xero, Free Agent, QuickBooks for a bit of a side hustle. You may have Hammock for the property income. But then again, how does that being brought together and everyone every agent will need brand new MTD tax return software. So, for example, if you're currently using TaxCalc or Iris or CCH or Digita or Sage for your self-assessment software, you'll have to have brand new MTD tax return software to deal with your MTD clients. So again, in your mind, you're thinking about how does this software operate? How does it take the data from the multitude of different sources? How do you have those ability to bring the information through? So I'm just having a quick look at the chat and the questions, see if there's anything popped through. See the Q&A. Yeah, that's fine. Good. So nothing urgent at the moment. Brilliant. But if you've got any questions, just drop them through and we'll put them through on the next stage. But also the other key thing to be mindful about is the opportunity around testing. And really this goes point in terms of your priorities over the next 33 days, 30 odd working days, is the fact that you need to get your clients set up on the agent service account. Now you all have one. If you've been dealing with VAT or you've been helping support clients in their CGT reporting, you're going to use that same account for MTD. Now, HMRC have already performed the plumbing in the background of your HMRC online service account to your agent service account, but you still need to spend your time on each client to confirm names, addresses, date of birth, validate the number of self-employed income as well as their property income. That exercise, even if you've got all the data in a nice little pretty spreadsheet, it's going to take you a good 5 minutes per client. And again, that's just the setting of HMRC. And that's before you've had a conversation around pricing. That's before you've had issued new letters of engagement. That's before you've set up clients on the software. So again, it's really important to think about when you walk into MTD, there will be an element of time spent just getting clients set up. And this is why bringing clients into testing, and Peter, some of you say, well, Chris, why are you talking about bringing clients into testing? MTD is only happening in April. No. The benefits of bringing clients into testing is the fact that by having clients into testing, you can actually experience what the brand new tax return software is going to look like. If you don't have any clients in 25, 26, this current financial year, you will not be able to experience the MTD tax return software any earlier than, let's say, May 2027. By having clients testing now, you can experience it during the summer. You can experience from April, May this year. But also the reality is the fact, even though we're in testing and Q4 of 25-26 is technically due by the 7th of May 2026, actually, because there are no penalty points, you can submit that Q4 sometime in January 2027 with the MTD tax return. So the whole point, it gives you the confidence of what the whole process looks like, not in terms of quarterly updates, but the process of doing the tax return in brand new software. Now we'll be going through the tax return software in the next webinar itself as well. So when we think about that, let's say, strategy around pricing for making tax digital, really it comes down to actually segmenting your clients. As I discussed, it's thinking about how does your client do work? What records have they got? How do they generate income? Is it via sales invoice? Is it by a till? Is it literally cash in hand? And you capture that. Do they have electronic receipts? Are they an Uber driver and therefore what they're receiving on a weekly is actually net of cost at source and that needs to be grossed up? Are they a grounds worker and again they're having CIS deducted at source? How are you going to manage that process? Again, having the detail of how your clients operate is so important because it then almost, let's say, not dictates, but provides a guidance in terms of the type of software you may use to actually meet the needs of MTD. But then also thinking about, before you have a conversation with pricing with your clients, actually think about what is your pricing strategy? What are you going to charge for particular activities? Because it shouldn't be guesswork and it shouldn't be, let's say, a different price for every client. There should be structure and strategy and consistency with every client around MTD, but also the flexibility, because let's be honest, this is a process which no one has ever done before. And therefore, no one really has, let's say, identified what the price should be, but also how your clients are going to behave, but also the hassle factor around the digital client chasing, but also what's involved in pressing the button on the quarterly update. I know it's just pressing a button and the effort is getting the data to the digital record, but again, we need to appreciate and feel what that looks like. So we need to build an element of flexibility in the pricing model when clients want certainty as well. So being bold and being upfront and also having, let's say, those points involved discussions throughout the whole year and also telling your clients that prices may change is really the way that it protects your profitability or your worth. Because at the end of the day, you will be having many conversations, not just around what is MTD, Why is it happening? What are the benefits to me? What software should I use? What's the cost of software? What's the process around? It's also around how much it's going to cost. And therefore, it's all about having an efficient approach to all those conversations. Now, also, when you think about the types of pricing, the pricing will be dictated by the style of the work that you're performing. And really, your clients will fall into three pots in terms of how the quarterly updates, the actual end of year process is going to operate. The first pot is going to be the do it with me clients. These are the clients who are quite happy with digital record keeping. They're quite happy with software. They may have already been using it. They may be VAT registered and already filing VAT returns. So really what the process is, they can carry on doing their digital record keeping as they have been. They have an element of confidence in terms of what a quarterly update feels like. They feel that, yeah, pressing a button to submit them information. And what they'll do is literally hand their homework over to you every May or June each year. So therefore, it's a case of what are you getting every year? You're getting a cloud-based bookkeeping tool. You're not quite sure in terms of the quality of it, the completeness of it. We all have those war stories, don't we? Clients who think, I've reconciled the bank, but they've ended up deleting transactions and replicating it. So you're nervous about actually, though the client feels they've saved themselves professional fees by doing the work themselves, are they actually going to be incurring unnecessary fees for you to tidy up the book significantly at the year end? But then again, if that's the model you take, then you need to be thinking about bookkeeping tools which are easy to review, easy to, let's say, fix the data, have the audit trail in place, and that really comes into the conversation, the style of the work you wish to operate. Then you'll have clients where, okay, they'll be using cloud-based software, they'll be raising invoices, there'll be a bank feed in place, they may do some light reconciliation, but at the end of the day, those people at HMRC, they're a little bit nervous about them, and they're not going to have the confidence to press submit on the quarterly update, which effectively means is they want you to review their work on a quarterly basis. So a bit like the end of year process, but something done on a more regular basis, really. So therefore, it's a case of what is the style, what is the review process, what is the quality of the bookkeeping your client may be performed, what happens if something goes wrong. And also, if your clients are doing much of the processing, you're almost dictated by their timeline in terms of when the data will be available to review and submit. And do you want to have that lack of control? And really, when you think about the experiences you're having with clients with VAT, where actually you will probably have quite a few of those review my work, when does the records become available for the VAT return to be submitted? Is it really a bit close to the 6th or the 7th? If it is, it's that type of work which you don't want. And therefore you want the control over the data processing and the accuracy of it. Which means when you think about the conversations which I'm having with many accountants at the moment, is they're leaning towards the do it for me model. Because when you think about many of the sole traders and landlords you work with today, especially those who are coming in from 27 and 28, they're literally just handing over their spreadsheets, their bank statements, a CSV file for the bank report, maybe the pile of the receipts. And really, that's the way they do. They want to do business, they don't want to do bookkeeping. And also from your point of view, it's a one touch, a one review approach type of work. You're not having to check information. You're taking the raw data and doing what you do well is the set of accounts first time round with maybe a few queries and adjustments and let's say checking in terms of what does this transaction relate to. So really we're seeing a lot of people going down to do it for me approach. But the challenge with the do it for me approach is actually having tools which are really slick, have that sort of XLS type ability in terms of being able to do an awful lot of work, but also give you the capability of a nice trial balance report, which you can then use at the end of the year. But also it's changed in their methodology because clearly you have clients who will be sharing information with their mobile phone for the receipts. They may be dropping in bank statements. Some clients are still nervous about bank feeds, but also some clients may actually still just have a single bank account for their business and the domestic life. So therefore it's thinking about how do you actually make that data processing more easier and how do I encourage clients to split their business, their personal life and have a separate business bank account. So again, thinking about that is really important, but it's also the volume of transactions. Because when you think about doing once a year bookkeeping, you just do the work. But actually, when you think about the number of transactions involved, how many of them are personal? Actually, the effort can be reduced by forcing clients to have a business-based bank account in the first place. But also from your point of view, you'll then think about what types of software should we be using, because when you think about MTD and pricing, so you think about a typical sole trader coming in from April 2026, what are the fees these days? £500, £600 per annum for a set of accounts and a simple tax return. Obviously, the movements around that in terms of complexity. But clearly, when you think about what's involved, whether it's, let's say, a review of the quarterly update, pressing the submission, that's going to have maybe a 10, 15 to 20% increase depending on the style of the work. We are seeing accountants where they're seeing their fees not increasing at all. It's because they're seeing the benefits of the software, and you're using the right software and it can actually automate much of the process. And I think this is the thing, is MTD is forcing innovation in terms of how the software providers are delivering the tools, but also it's creating that inquisitiveness of the profession to actually start to think about, yeah, I've been doing this on a manual basis every year for the last 20 years for this client. I think it's time to use some software, but now I'm going to use the right software, which actually delivers the right job. Because at the end of the day, every client operates slightly differently. And then also some clients are really thinking about how they're going to work with you on a more regular basis. So the key thing is think about the right tools. So from Sage's point of view, we're trying to give as much choice as possible. So when you think about, let's say, what should be a market, the key thing is the typical sole trader, when they start out, they don't engage with an accountant. They don't engage with HMRC. What they do is they take some income, they put it in the bank account, and they make some payments. So they're doing their banking on day one rather than, let's say, any bookkeeping. And this is where you have seen the announcements recently in terms of Monzo and HSBC partnering up with Sage. And what this really means is in the Monzo and the HSB mobile banking app, they can effectively categorize transactions. They can do their MTD quarterly update. And then in the Monzo are already doing quarterly updates with sole traders in the Monzo app, which effectively means you as the accountant is price of software goes out the window because the client's already doing what they're doing. But also from an accountant's point of view, the way you access the data, and we'll be showcasing this at Accountex, is the fact that you'll be able to have a single view of all the data, no matter which bank is being used, and therefore you'll be able to edit the transactions and bring that to life. So the whole point that the collaboration exists, but what it does mean is when you think about those cohorts, especially the 27, 28s, where it's simple data processing, simple bookkeeping, plus something which works with them, that's the type of style of bookkeeping which may come into play. But also the inevitability is the fact that you will have clients which will be hands-off with the technology. They want to do business, they've never engaged with technology, they may do a bit of snapping of receipts, but that's about it. They may have a whole myriad of different spreadsheets, they may have bank statements, and therefore just messy bookkeeping, and you're concerned, how would I deal with that? And this is why tools like Accounts Prep from Sage are ideal. In fact, it's the savior of MTD. We're seeing accountants are effectively going to bring in records for this current year, 25, 26, drop it into the tool, do the year-end accounts in April, and then start be ready for the quarterly updates. And this is the whole point, is having tools which work with your practice, not fundamentally change how you do work. But then we have clients who are digitally savvy. Sage Individual, that's a free solution, as well as £4 a month for, let's say, additional sales invoicing and some OCR built into it. But again, the inevitability is simple sole traders with 1 or 2 transactions a month. They can literally have software which costs them nothing at all, which is really ideal for those clients who literally just want to meet the bare minimum of MTD. But then also it's the fact that there'll be clients who are more sophisticated. They may be thinking about CIS or be VAT registered. So again, you've got all the tools available. But the key thing is, as an accounting firm, you need to be thinking about what type of solution do I need, and putting the right piece of software to the right client type as well. Just looking at the questions, I've got a question here. I'm concerned that HMR systems will not cope with the transition for a client moving from self-assessment to MTD and will reject the 25-26 tax returns. If the client's completed, have they signed up to MTD? I'm wondering whether to price this in, as this would involve contacting HMRC, who will be struggling with the volumes of calls. My understanding is that this transaction is okay. Is the pilot MTD not sure has been tested and stress tested? Right. I think that's a good, timely question. So the inevitability is from April 2026, those will have to be maintaining digital records, and their first MTD tax return will be due by January 2028. Clearly, we've got 25, 26 self-assessment, which is live. But to be honest, that's a different platform. That's a different system. That's not going to affect MTD at all. So on the basis you have clients coming into MTD from April 2026 and they haven't done their 25, 26 self-assessment tax return, it's not going to be an issue because they are filing via the old system and putting information by January 2027. That was not going to affect the platform which you're using for MTD. So that is not going to be the issue. So in terms of, let's say, how is HMRC Systems going to be coping with it? Let's be honest, HMRC is not taking in huge amounts of transactions from the software. They're literally taking in 9 or 10 box values and a little bit of background metadata. So the actual volume of information being passed to HMRC is not huge. Where there will be a complication, I suspect, is actually when it comes down to the MTD tax return, of which you'll be doing your first tax returns from that from sometime May or June 2027. And when you think about it, there will be a greater volume of data because what we'll cover in one of the other webinars is the future of the tax return. And if you think about it, HMRC are performing the calculation. So as you're putting live information in and out, the calculations are, there's going to be a volume of API calls. But again, that should not be an issue. So I appreciate your concern, but actually it shouldn't be a concern because you've got two different platforms for self-assessment as well as MTD. So back to pricing. So really the challenge around pricing is we've never done this before, but also you will have to review. You have to review what you're charging now. You will have to reprice the clients because you'll have clients where you'll have to perform more work. There'll be a software cost. There'll be a cost for transition and everything with it. Plus also, you need to re-engage them. New letters of engagement for all your clients. But also these letters of engagement will need to be completely different to self-assessment because there's a change in risk, there's additional reporting, which means that need to go through that effort. And therefore, when are you going to issue them? Well, MTD starts in April, so therefore it's a case of getting onto the bureaucracy and the admin as soon as possible. But also it's the fact that you are always concerned, am I pricing correctly? You may be concerned, oh, my clients may not appreciate or may be concerned about an increase of 15, 20%. And therefore you may be giving away value. But from all the stories, from the conversations which I've had with accountants in terms of when they reprice their clients, actually, you're probably undercharging in the first place. As well, clients will have no choice about this because they may say, I'll go to another accountant, but actually, does that other accountant really know them very well? They're going to be experienced the same sort of approach in the pricing. But also, I don't know about you, I'm seeing a profession which has never been so busy. There is plenty of work out there. So I would be bold, I would be clear, and I would be confident in terms of the prices which you charge, because at the end of the day, MTD is that single moment in time to actually reset the balance and get the client to be paying you the value which you're worth. Now, in terms of the foundations of any pricing strategy, I think this plays out not only in terms of how you deal with your VAT clients or any compliance year-end clients, or even let's say think about payrolling benefits and kind from next year. The key thing is have a systemized approach, but also this needs to be transparent. It's the fact that for every process or job or task, there's almost like a fixed cost to it. I appreciate we don't charge by time, but we all have in our minds how much time that job took. But also with that, it gives an idea in terms of what you end up or wish to be charging. And with that, it's also what is the value being conveyed. HMRC are forcing a change. So use that forcing change to actually think about the value being conveyed. Clients do not wish to press submit on a quarterly update. They're concerned what will happen or the ramifications. Well, there aren't any ramifications because HMRC do not really care about the quality of the information being passed forward. They just want clients to be maintaining records in a digital manner to actually improve the accuracy and, let's say, the information we capture on a timely basis. But also it's the fact that if you've got a consistent and systemized approach with pricing, as those clients you've got grow, whether their turnover increases, maybe the complexity of their business changes, they take on their first employee, actually you have a lever or two to actually use to actually flex that pricing accordingly. Clients are aware of what happens when things change in their business. Clients are aware what happens when they don't actually behave like they should do. Clients are aware what happens when information is shared late. Well, that creates a ramification in terms of cost and urgency, and therefore your clients will be charged accordingly. It's no different to, let's say, having a menu when you go to the restaurant. They know exactly what are the fixed costs for the main meals. There's some extras which they can buy into, but the whole point is having the transparency of what the costs are, which also means the fact that you've then got options in terms of, as you may be seeing different changes in software costs, or maybe you as a business are then putting changes in how you review your quarterly update, you have the capability to actually change certain elements of that menu accordingly based upon the time spent. Then let's think about how to actually price for MTD itself. Now, when you think about it, most clients and sole traders and landlords, they see a single bill once a year, and the description is probably accounts and tax return. That's it, a single number. But when you think about the opportunity MTD brings, is the fact that you can actually break it down into its various components. And by having it broken down means you can actually break down maybe the various elements of how you will charge for MTD going forward, not only in terms of, let's say, the digital data processing, the quarterly updates, but also the tax return itself. But clearly everything starts somewhere, and that starting up is actually just getting the client set up. Now, yes, there's that background working in terms of getting clients set up on the agent service account, but actually you may have clients who are using a particular piece of software already. There are many traders out there using one particular software just to raise a sales invoice, because that's what it is. They want to get paid. They're quoting and invoicing. But actually, that piece of software doesn't do the bookkeeping. It's not MTD compliant. So therefore, you may be thinking about, how do I actually convert and train my clients onto an MTD compliant piece of software? You may be bringing in opening balances or other processes in terms of the data processing. Therefore, it's a case of there is a setup and training thing. So there's setup maybe on the ledger, but also your clients may wish to be trained on it as well. And again, from the various conversations I'm having, I spoke to a bookkeeper literally just 2 days ago, and she was going out to training someone at that £75 an hour training, and the client was more than happy to pay for it. And I think this is the one key thing, is the fact that this is forcing a change, but also the clients are seeing the value from the software. The next stage is actually pricing for these quarterly updates, because whether it's a review my work stage on a quarterly basis, or you actually doing the work yourself and pressing submit, there is an exercise around it. Mainly based upon the quality of the information that is being received from the client. Is it structured? Is it digital? Is it analog? Is it literally in a shoebox? Or is the client sending you CSV files which you can work and import into a system? What is the quality of information? So if you're reviewing the work and the quality is poor, naturally you're going to charge the clients more money, because you have to perform more review and corrections. If the client is quite digitally savvy and they've invested in training and in the software, maybe the quality of information reviewing is quite high. But again, even just pressing submit on the quarterly review or the quarterly update, there's a cost involved, whether it's a cost internally by yourself as a practice to review the work, or even if it's you as just a sole practitioner, it's the fact that you're still performing the activity. So whether it's £15 or £50 to press submit, the key thing is have that item listed, and that is what you're going to be charging for. Then the next stage is actually the data process, isn't it? That's the bare bones of MTD. Date, transaction value, categorization. But really, the data processing is all that's required, but also the data processing will be based upon how much needs to be performed. So a sole trader raising one invoice a month on a few expenses is going to be a completely different subject to, let's say, someone with a mobile coffee shop with Z readings on a daily basis, with volume of transactions and lots of purchases. Again, that needs to be measured out, and therefore having an understanding in terms of what was the volume of transactions last year will have a reasonably good indication in terms of the effort involved for this year going forward and the quarterly updates. So again, think about some bandings or some tiers. But also it does mean is actually, as your clients grow, in terms of, if as a client who goes from £40,000 a year goes up to £60,000 a year, well, it's not going to be a sudden leap. that client will grow gradually on a quarterly basis, which means you can say, well, actually, your volume of transactions have gone from 100 to 150. Naturally, the price is going to increase. So rather than, let's say, in a position where actually the scope is increasing and you're delayed in how you recharge your clients, you will have a mechanism in place to increase your fees based upon the nature of, let's say, the volume of the transactions of services rendered. Then we're thinking about the actual bank reconciliation itself, because some clients is income and expenditure, so cash in, cash out. A landlord, maybe there is no bank rec, but actually, as we are seeing, reconciling a bank is very much important for those growing businesses. But also, it's the number of bank reconciliations there are. Is it one? Is it two? Is there a credit card? Is there a bank loan? All of which takes time. But also, is it something which you're going to be performing on a monthly basis or a quarterly basis, or maybe just once a year? But again, that's something which you wish to document. But also the key thing is actually having a mechanism in place to actually say, well, actually my client is more complex, that's what's going to be involved. But also you may even put a premium in place for clients who do not have a business bank account, because naturally you will be reviewing far more personal transactions, which may take time to discuss. Are there any in business in nature? Therefore, it's really important to be upfront in terms of this is the service you need to perform, and also the implications in terms of your client, in terms of if they do not, let's say, improve the quality of their underlying business records. Now, we've talked about data processing. Well, that's the bare minimum of MTD. Bookkeeping, well, bookkeeping is not a requirement of making tax digital. There is no requirement to do a set of accounts on a quarterly basis. It is literally just cash in, cash out, making sure the invoices are complete. Things like accruals, prepayments, stock adjustments, fixed assets and depreciation, that can all be left until the end of the year. But actually, some clients may say, I want to have a more accurate quarterly update. I want to better understand my tax estimate and plan ahead properly. And therefore, rather than, let's say, just doing bookkeeping and not charging for it, make it available as a service which can be provided. And therefore, again, it's important to have that menu of options and think about how that gets brought into it. But also encouraging, maybe once you get the right rhythm of MTD going forward, you may start to see that actually doing some of these accounting adjustments on a quarterly basis will effectively save time at the end of the year when you produce the normal end of year accounts. Then we're thinking about the actual tax return itself. So you imagine we've done all this extra value, which we've just hidden behind the curtain of what we do every year, which the clients don't appreciate what we do once a year. We've now explained what we do and we're going to charge for it. Now it comes to the tax return. This is what the clients pay you to do. Now, again, think about the tax return itself. Does the client have supplementary sheets? I.e., does they have, let's say, any capital gains? Do they have a little bit of a share portfolio which needs to be dealt with? Again, listing that out and having that systemized in terms of the pricing approach. But also, some clients are a bit more fickle than others, aren't they? You provide a draft computation and the client sort of pinches their lips and then reminds you, oh, I've got another stock revision put through. Oh, I've got a bad debt. So therefore, you'll have a hassle factor, I suspect, for some clients. Clients are always, let's say, giving additional adjustments at the end of the year. So the number of reviews and the handling of the adjustments, I think, should be brought into play based upon how your client behaves in terms of the amendments revolved around the tax return. So again, having that sort of transparency, the drafts, etc., all of which basically conveys value, but also it gives the impression to the client in terms of actually there's far more to the end-to-end process than they ever thought in the past. And then also being upfront. Clients want advice, clients want guidance, clients want to do tax planning, clients want to save or reduce their tax bill, whether it's about how do they actually be more efficient in terms of capital expenditure, what they should buy, whether it's thinking about payments on account or actually just maybe just getting a mortgage. All of that is advice and guidance. But the key thing is actually putting that as part of the process. Rather than, let's say, have a conversation after the event, be clear in terms of these are the services which you can offer. And also the fact that remind the client in terms of, yeah, I want some of that. I'm going to have a meeting in place, but also being clear and transparent in terms of there will be a cost associated with it as well. So when we think about pricing for MTD, the key thing is actually having a pricing conversation ready, thinking about what you want to charge, how do you want to charge it, what service you can apply, be ready for any objections. But really, MTD is that golden opportunity to actually reset what you're charging your clients for many years to something which gives you the flexibility and the ability to recharge clients appropriately based upon the work performed. Now, I've been talking about, let's say, the capability to have a menu option of services. And this is what we've built in Go Proposal, which is complementary within Sage for Accountants accessibility. It's the fact that you've got the capability to price your clients in live moment with them. So when you think about the volume of transactions, maybe the turnover, the complexity, the quality of the accounting records, thinking about the number of banks which need to be reconciled, all of that, all of those are themes which I've been discussing about are all menu options within the platform. And what we are seeing, accountants who can have conversations with their clients in real time are having really valuable conversations, which means that fees which were maybe £500 or £600 are easily being upped accordingly, as well as the ability to bring the software. So it creates that transparency. But also the clients are then also aware of what happens when things change. And I think this is why it's really important when you're having a conversation with pricing to actually have an agenda in place ready to do so. So your agenda can operate any way you wish. It's up to you. But I think it's worthwhile having those themes listed, ready in terms of maybe not just the value offering, but in terms of the next stages. Because like anything, you want to sort of have a conversation about what was the good and the bad and the ugly of last year's self-assessment tax return. What worked well, the timeliness of information, but also the challenges which were around preparing those accounts. Be upfront, be clear. Say that the spreadsheet you gave me was wrong. It did not balance, had missing transactions. I had to work harder to reconcile it. How often do you have those conversations? You have to have those conversations now because you cannot be doing that with MTD going forward. But also at the same time, listening as an art form, but also listening from your clients in terms of what do they want to do? What are their aspirations? What information do they want? What is their plans for the next 12, 18 months? This will then guide in terms of the value, let's say, focusing on the benefits and the accuracy of the data processing. But also with that meeting, it's thinking about what are those touch points? We're going to do Q1. It's going to be due by the 7th of August, 2026. But also having those review points and saying, in September, we'll have a conversation about the quality of the records, what it was feeling like. Because if your client said they're going to sign up to be sharing information on a certain date and a certain quality, they said they're going to be, let's say, sharing a CSV file but didn't, well, that if they didn't do so, that's going to have an impact in terms of all the other quarterly updates going forward. So you need to have a robust conversation, and therefore making sure you have a meeting booked in means that conversation will happen. So the key thing is actually having that agenda in place, ticking off the items, and also sharing that with the clients in advance. But also the inevitability is that some clients will basically say, they're nervous about fee increases. And this, again, ready with, let's say, their objection handling. You are all experts in terms of how you handle objections around pricing. And clearly, you'll have clients who'll be thinking that fee is too high, but then thinking about how and the benefits that digital record keeping comes into place. Some clients will say they're under financial pressure, but actually by having visibility of their business numbers, something which they probably don't see sit until 6 or 7 months after the year end, but now have in real time, means you can work with them to inform business performance, maybe reduce some cost, have a better appreciation between profitability and their drawings. That has a massive impact, and that's the value which is conveyed by having information on a more timely basis. But also it's the fact that some clients will say, right, I'm going to do this all myself. But also be clear in terms of what happens when the quality of information is not great. You're going to have to rework it themselves. So having that documented, having that listed, put into an email means you have something to go back to when there's a concern or maybe some kickback in terms of pricing. So therefore, when you think about MTD, it's about having a checklist, a process, a system. So therefore, thinking about the pricing, the value which you can buy, having those calls booked in, those meetings, whether it's a 10-minute call over Teams or Zoom or a face-to-face conversation, having those in place is so important. But also having that regular review after the meeting. Now, in the good old days, that would have been quite time-consuming. But these days, whether you're using ChatGPT or Microsoft Copilot, the ability to actually review notes and agenda points and draft emails is so much easier than ever before. And this is what we're seeing within Sage for Accountants. We've got Sage Copilot within the platform in your practice management solution. So you can draft and tailor and send those emails out automatically from the system. But the key thing is the admin and the bureaucracy is made easier by using the right AI tools going forward. Now, something very few people are talking about is the fact that you will have to re-engage all your clients. One, because it's a new service, it's a new piece of risk on both parties. But also, I think it's really important to have a schedule of services, because when you think about so far to date, when a client leaves you, well, the last point in time would have been that settlement accounts and tax return. That's what the client signed off to and agreed. But going forward into an MTD world, a client can move from one agent to another, maybe 6 months in. So what are you handing over? Yes, you've got last year's set of accounts and tax return, but you've only done maybe 1 or 2 quarterly updates. And a quarterly update in terms of digital record keeping can look a whole different theme of work based upon the accountant. Some accountants may reconcile a bank, some accountants may not. Some accountants may do accruals and repayments, some may not. So it's really important in your letters of engagement, you have a schedule of services in terms of the work that you are performing and the work that you're not performing. I am not doing accruals and repayments. I am not doing stock adjustments. I am not making sure the fixed assets are reconciled. I'm not posting depreciation. Those are the jobs which you are stating you're doing until the end of the year, which then reduces any ambiguity in terms of the services offering, but also creates transparency, because if clients are saying, oh, I'm not quite liking this new MTD fee, I'm going to go speak to another accountant. Well, you can say, well, this is what the work I'm doing for you. What is that other agent's charging? So again, letters of engagement are probably going to be more important than software itself. So get it right, have clarity, but also the other key thing about letters of engagement is thinking about protecting you when it comes to prices and monthly billing, which we'll then approach now. So when we think about MTD, it's all very well thinking about what you're going to charge, but the key thing is getting paid for it. Now, under self-assessment, 9 times out of 10, you do the work, you raise a bill, you tell the client what their tax bill is, and hopefully you get paid accordingly. That's what's always happened. Under MTD, you've got a continuous theme of work, but that theme of work is going to go on forever. MTD is now the future way of how self-assessment or taxes will be dealt with for sole traders and landlords. And therefore, if you're going to be doing work continuously, you should really be paid continuously. So not quarterly, but monthly. So the reality check is, when you think about what's going to be happening this summer, you're going to be doing self-assessment as normal. You're going to be doing 25, 26, asking the information in, turn the wheel in the summer, do a set of accounts and the tax return, hopefully on a timely basis. But you'll also be doing quarterly reporting, but you'll also be wanting to be paid for that. So let's just take that scenario of a client paying you £600 a year for self-assessment. That's now going to be at least £50 plus a bit more going forward. So the reality is, in this first 12 months of every MTD year, whether it's the cohort for 26 or the one for 27 or 28, your clients will be paying double in 12 months. So there's you concerned, well, should I be increasing my fees by 10 or 15%? No. Your clients will be feeling, wow, this is a 200% increase, isn't it? Because they'll be paying for self-assessment as well as MTD in 1 year. And this is why it's so important to be upfront with billing going forward and what's going to be charged. But also, it's a case it's a bit late for the 26 cohort because we're starting next month. But again, these are conversations which should really be had with the 27 cohort now. So clients who usually pay you in September, October, the self-assessment get those clients paying you monthly now from April, which means when it comes to self-assessment end from 26, 27, they've already paid you the fees for self-assessment, which means when it comes to MTD for the next year, they're already paying you monthly. It's going to be an increase for maybe software or maybe any additional data processing services. But the other challenge you've got is deferred revenue, because I suspect most accountants on this webinar right now have possibly a March or April year end. That's the majority of cases. So if you think about it, when you're in a world where pretty much all your clients are paying you monthly, and in the world of MTD, you've done 60% of the work, you've done 3/4 of the work, but your clients have paid you for a whole year. So you've got all this deferred revenue for your own financial year. But also, not only do you have to think about your internal mechanics of dealing with deferred revenue for your own financial reporting, what happens if a client moves? So a client has paid you monthly up to March 2027. You've done 3 quarterly updates, but the client says, I wish to move agents. They're going to move agents in April or May 2027. But they paid you up front for 12 months worth of work. You haven't done Q4 and you haven't done the tax return yet for MTD. Where is your position? How much money, how much level of that fees do you have to pay back? And this is why it's so important to focus on your letters of engagement, because naturally some of the fee of the tax return is actually part of quarters 1, 2, and 3 because you've done the work. So it's really important to schedule out what happens when you part ways. If a client leaves partway through a payment plan or leaves after the year end and fully paid up, what proportion of those fees will be payable back? 10%, 20%, or none at all? And there's an argument for none at all based upon the fact that much of the work has already been performed. But again, you need to have that documented. And therefore, it's all about protecting you in terms of pricing, but also protecting you in terms of profitability. So these are the aspects which you need to be considered when it comes to pricing. So I trust the last 55 minutes have been useful, thought-provoking, got you thinking about how you can price for your services. But again, it's all about really sitting down, performing that client segmentation, understanding what the bookkeeping has been to date under self-assessment, how that's going to translate to MTD. Think about those complexities of maybe revenue and revenue recognition for your clients, some which are Uber drivers, landlords, sole traders who are raising invoices, not raising invoices, and then think about the, let's say, the level of data processing involved and getting clients to at least have a dedicated business bank account to reduce the number of transactions which would need to be categorized. But also please put in place a safety blanket for when something goes wrong. And something goes wrong is clients not behaving as they should do. Clients may be sort of leaving partway through the year, and also clients may be asking for their money back or a large chunk of it if they paid you up front and moved to another agent. So again, think about letter of engagement. But again, if you need any help or advice, reach out to your favorite Sage contact or go to our hub for additional guidance. But back over to the studio.
Thanks very much, Chris. There's an awful lot in there actually, and yeah, a lot of very useful stuff there and a lot to think about. Just 2 or 3 things that really struck me. The first is that you said this is the best opportunity to reset the relationship with clients for a long, long time, and I think that's absolutely true. And the second thing is it's not easy, and it's not something that we're really used to. And there were 3 words that stuck out that you said almost at the beginning, and I think they're really good advice. First of all, be bold. Don't shirk away from this. Get in there, do it. Be clear, because clarity is the only thing that's going to keep you alive in this, I think. And be confident, because they're going to have to do this. They're going to need your help to do it. You can't do it for free. So have the conversation. Really good stuff. I'm surprised we didn't have any really long question.
Maybe people will, let's say, oh dear, I have a lot to do. I just want to take it all in.
I think you've shocked them all, but the slides will come out afterwards. There's an awful lot in there. It's absolutely brilliant. So thank you very much indeed, Chris. It would be good if you could leave us a rating for today's webinar. There'll be a poll coming up on your screens now or in the chat box at the top of the screen. We'd really appreciate your feedback. So please take a few minutes to respond before you log off. Looking ahead, if you haven't already, please do sign up for the remaining 2 webinars in this MTD Roadshow series with Sage. We're back to Tuesdays. This is the only one that's on a Thursday. So we're back to Tuesdays next week, 24th of February, Bridging the Digital Gap, helping clients who can't or won't use software. Another really interesting and relevant topic. And then a couple of weeks after, on the 10th of March, less than a month to go, Are You Prepared for Making Tax Digital? Links to all those sign-ups are on the ICAS events page at icas.com/events. And if you can keep up to date and access a range of MTD resources at our MTD Hub, which is being accessed through the tax section with technical resources on icas.com. And if you need further support, then please do get in touch either with Chris and his team or with tax team, or practice support through the ICAS Technical Help Desk, which can be accessed either from the MTD Hub landing page or through the support section of the technical resources section of the website. So all that remains now is for me to thank Chris again for his expert insight today, and of course you, the audience, for joining the webinar. And I really do hope it's been useful. Thanks for joining us, and until next time, goodbye.